Aloha, everyone. I'm your host, Christina Laney Mitri, and welcome to Smart Living Hawaii's podcast, where we discuss smart homes and technology, sustainability, healthy lifestyles, and smart business. Today, we'll continue our Sustainable Leader series, and we're going to have a talk story with Judy Meredith. She is with PRMG Hawaii. And today, we're going to be discussing land loans and how someone can obtain a land loan to build on, and also a topic of discussion by many who are looking to find that perfect family larger lot, usually over 10,000 square feet, what it takes to actually do that. And we'll kind of walk you through that process today. Okay, so without further ado, aloha, Judy. Thank you so much for joining us.
Hello, Christina. Thank you so much for being here. It is always so fun to do these podcasts with you. I'm looking forward to today's topic.
Awesome. So before we begin, a little bit on Judy. Judy is an expert loan officer and PRMG Hawaii area manager with a passion for helping clients achieve their financial goals. Serving all Hawaiian Islands and 48 states nationwide, she specializes in conventional VA, FHA, USDA, renovation, and reverse mortgage loans, as well as out of the box specialty transactions, probably like the ones we'll be talking about today. A board member of the Hawaii Association of Mortgage Brokers and the Veterans Association of Real Estate Professionals. She also teaches continuing education for realtors and financial advisors. I have been in her classes and they're excellent. So if you are a financial advisor or a realtor listening in here, definitely take one of her courses. You will learn a lot, I promise you. She is the author of the column Equity Matters and is also known as the Mortgage Professor. She is dedicated to making the home loan process seamless through education and expertise. So, I always like to start off by asking you a personal note. What does Judy do for fun?
We live in the beautiful state of Hawaii, so there are so many things to do for fun. Outdoors, obviously, is the most fun, and I think about a mile out from the ocean and about 100 feet down is really where I find my solace, as I'm a master diver, so that's actually my favorite thing to do is to go scuba diving. And yes, coral and fish and sharks and octopus are amazing and gorgeous and beautiful. But here in the islands, we are also surrounded by military bases, which means sunken ships. So if you are a Titanic fanatic, this is definitely the place to go and explore some sunken rooms, and you can see what kind of animals are inside there and have a relationship with a shark inside of a sunken ship. So very fun.
Yeah, my dad actually has always been like an ocean engineer and diver, and we started diving at like the age of 4. But yes, our whole family loves the ocean like you do. So that's so awesome. All right. Speaking of diving, let's dive right into our topic today. Let's see. I want to really cover, I've been getting a lot of inquiries in regards to a local family, wanting to figure out how they can get situated into some larger pieces of land. I mean, sometimes it's just an acre, a couple acres, 5 acres, depending on what they're looking for. But they want to find a place that they can retreat to, either for their home to live there and build a house there, but to have more of a sustainable dwelling, to also be able to like live off the land a little bit more, grow some food, have some space, have some chickens, just some extra things that are a little bit more on the sustainable side. Being here in Hawaii, where we, are surrounded by water and don't have maybe all the means of all of this, produce at our disposal at any given time. So, with that said, a lot of people do have their current homes and they're trying to figure out and put these pieces together, like, can I make this work? Is it even possible to do this? And if so, what do I have to do? So I thought I wanted to talk to you about this because you do have some unique opportunities and different loans that maybe others may not have. But before we go into those, I did want you to share with our listeners a little bit more about the process of doing this, and what it takes financially, so that people can prepare for this. If this is really their dream, what they're looking at doing. And it may seem like an uphill battle, but if there's a will, there's a way. And if not, let's find some other solutions. So that's my whole dream to cover in the next half an hour.
Thank you for laying that out. And I think that when it comes to living on a parcel as well as being able to grow your own food past, just the one mango tree that you trade with your neighbors when you get good mangoes. I think that that's everyone's dream, and especially what we've been feeling recently. I don't know if you've been to the Costco or the Walmart lately, but we are completely out of eggs. Not only is there a nationwide egg shortage, but you mentioning chickens, there's a egg shortage right now. So that's a perfect example where a family that has a couple of chickens is gonna not have the egg shortage that a family that does not have some chickens may have, because it is affecting all of the farmers across the nation right now. So I think that topic is definitely the way of the times. And when it comes to purchasing land here in Hawaii, and we'll keep it to the Hawaiian Islands because I
Yes.
think that we've got very something special here that doesn't really occur on the mainland. But when it comes to Hawaii and purchasing land, I think the biggest difference is going to be whether you're purchasing vacant land, which is full on vacant land, no water, no electricity, not even a telephone pole to bring out your cellular with, versus land acreage per se with possibly a dwelling that has already been built on it. And the condition of that dwelling, whether it is in pristine condition or whether it is a little dilapidated because they're selling it cheaper or whatever the case may be as a fixer upper. But the difference would be that one has already gone through the development stages, meaning that water and electricity is available, whereas the other one is showing that that there is no water or anything available. So because of that, it will be more challenging and will be considered to be vacant land. When it comes to purchasing real estate here in Hawaii, vacant land by nature, with lack of a better way of saying it, is one of the least desirable type of loan programs for lenders. The reason for that is because from a lender standpoint, when we are placing a mortgage onto a home, we're basically looking, unfortunately, at the worst case scenario, right? What happens during, and because the loans are written for most of the time 30 years, especially in the residential realm, what could happen within those 30 years that may change this customer's or borrower's ability to make that mortgage payment. And what they found with tested scenarios over time is that if someone owns a primary residence and then they own a secondary residence, a second home or an investment property that they're renting out, and then they own a vacant land, basically what's going to happen, what we're going to find is that if that buyer or borrower were to get into any kind of financial trouble, that obviously the least used piece of real estate would be let go first. So generally that's the vacant land because they cannot use it to live in at the moment, and they're most likely not renting it to anyone. Investment properties would be next. And then, of course, they're going to fight tooth and nail to hang on to their primary residence. So because of that, that's the main reason why vacant land loans are very hard to attain, and very few lenders are even lending in that space altogether.
Mhm. Even more so today, right? I would say that.
Or so today. Especially over the last 5 years with inflation being where it's at, families really being hit hard. Things that seemed easy to go to the store and purchase, readily available, are not now, or are so much more expensive now that it's put a very big strain onto the average family.
Yeah. All right. So what are we talking about? Let's see. Let's go down the road of the type of loans that we can get today on land, and like the routes that people can take now, I guess. So it's not impossible. It's just expensive. But yes, let's talk about that.
You are absolutely right. It is not impossible in any way. And we help homeowners put that scenario together all the time. It really just depends, number one, on preparation, readiness, capability, of course. And then on top of that, having a fantastic guide that is very, very knowledgeable and able to take you from point A to point Z. And I use point A to point Z rather than point A to point B, because there are a lot of steps that you've got to go through in order to meet that goal. So, but I think when it comes down to vacant land, and it's going to come down to either the one step or the two step. Okay. And the one step would be for the person that already owns land. So let's say that they already purchased a piece of land at one time and that they're already the owner of that land. Okay. Then what they would need to do is take on a construction loan. And we could do all of that in one step. And then from there, we would help them to build their home. The the other opportunity, which would be the two step, would be when that buyer does not own any land at all already. Okay. And they're looking for a fresh acquisition. And they're starting from the beginning, very much in the same situation that you just described with the family that you're working with, where they already own a single family residence in Hawaii, and now they are looking for a vacant piece of land elsewhere, which they did not already inherit or own at some point. Okay. So the reason why we call it a two-step in that capacity would be because the first step would be the land acquisition itself. Then the second step would be the construction loan to build the dwelling after the fact. Generally, the time lapse between step one and step two is going to be generally 1 to 3 years. The reason why it would be 1 to 3 years is because of the permits that are required to build the structure and our Department of Permitting and Planning here in Hawaii. We have a very special situation here. And what that really means to the layperson is delays. Because most of the fashion that the Department of Permitting and Planning, which we'll call DPP going forward from here, the biggest delays that occur in DPP is because of their very manual process. Most departments in the mainland, things are uploaded electronically, they're viewed electronically, and they are pushed through electronically. Here in Hawaii, we are still submitting plans in the form of paper. They're still flipping pages with their highlighters and their pens. And that is actually one of the reasons why everything is so slow here.
Well, actually, they did now have everything can be uploaded digitally. But from my understanding, like if they're doing a commercial plan and you have to upload 1,500, you're literally taking 3 days to upload because the system is like so archaic. It's insane that this is what they decided to take on. So that's a whole nother, we could do a whole nother podcast on DPP. But currently, yes, it takes a ridiculous amount of time to get your permits to build your home or even to do some minor minor things to your home. So yeah, it's a hurdle that we face. And I don't know, maybe with the fires in California and Trump moving things along with getting them to bypass stuff that maybe we could learn from that.
So, a little bit of the work that we're doing right now with the Hawaii Association of Mortgage Brokers, as the chair for the legislative committee, that's actually what we're working on this year. So last year, all of our condominium insurance problems, that was what we worked on last year, which resulted in a proclamation being issued by Governor Green back in August. And then this year, we're tackling the DPP. So we will be meeting with the mayor as well as executives from his office in order to discuss DPP reform and how it is affecting our homeowners. So I'm really excited to see what's going to happen in 2025. I mean, we were able to push the right buttons in 2024 with the condominium insurance issues. So I'm really excited to see what we're able to do this year for DPP. And we may be able to start to move the needle just a little bit, at least bringing awareness to the situation so that we can start to provide some solutions.
Yeah, I think the solutions key is key because I honestly think the mayor does want this fixed. I just don't think it's as easy as just that.
It definitely is not as easy as that. It took, as we like to say, it took us decades to get here, right? It's going to take a long time to unravel those things and to be able to put a procedure in place that doesn't disturb their current pipeline of who they've got, in the wakes, waiting for their permits, as well as the new folks coming forward. But I think that staffing is number one, right? Getting some additional bodies in there to really help with these cases and to really get this off and running for the people here in Hawaii. Yeah. Now, and then going back to vacant land and purchasing the land and then building on the land. So going back to what we were talking about as far as the two-step goes, land acquisition and then construction loan, it would start with identifying the piece of land that you'd like to purchase and having a lot of skin in the game. And when I say skin in the game, what we're talking about is down payment plus closing cost funds. Right now, it's definitely upwards of 35 to 40% down. Okay. So if we're looking at $1 million land purchase, that buyer would need 400,000 easily in order to execute or acquire that particular piece of property. After they acquire that property and they become the owner of it, then they can start to take all the inspections and meetings with their contractor and all of the things that they need to draw up plans for their home. Generally working with a contractor and a draftsman coming, bids on on the actual construction itself. That in and of itself, that process could take, really depending upon how quick of a decision maker that you are, it could take 6 months. It could take a couple of years just to draw those plans and come to an agreement with contractors. The main reason for that, as you know, is there is a lot of work when you are building the home from the ground up. And before you can have a concrete construction contract, that builder or that contractor is going to have to get bids on every single thing that you are trying to build. And from there, they will put together a construction contract. And then once you are in agreement with that, then you and get it submitted to DPP and jump through the hoops of getting all of that approved. Once your permits are ready, then you're ready for step 2, which is getting ready for your construction loan. Now, as a lender, we always recommend that the minute that you decide that this is something that you want to do, that we will get you pre-approved, not only for step 1, which is the land acquisition, but obviously step 2, right? Because we wouldn't want you to purchase that land with the goal of building something on it. And then after you've spent your time and resources to buy that lot, then you find out that you were never able to build on it anyway because you cannot qualify for the construction loan. So generally, if we know that your end result goal is to build that home, have a standing dwelling, we're going to look at the entire lineage of that project to make sure that you are properly prepared for both steps. Once your permits are ready, then we can execute on the construction loan. The construction loan at that time can take into consideration the equity that you already have in that lot or in that land that you've already acquired. And that's why when we previously spoke about the two different sides, and the first side starts with already owning the land versus the second side, which would be acquiring the land fresh out. And that's where the two differences really come into play.
Yeah. Okay. So what are the, I guess, options that people have? I know that you're talking about the loan that maybe you could explain to them about the 1 to 3 years, like more of that balloon payment versus a different type of loan that you guys also offer. And it might be for a different scenario, because I mean, I do deal with other people outside of just looking for their primary residence, working with like farmers or people that are looking for land for different purposes, right? So maybe you can share, because I know you had a scenario with someone that's more on the farming side, and what it looks like. And then we can also, from there, we can, talk about the pros and cons and things like that.
Now, when we are looking at um, when we are looking at vacant land that um, uh, the acquisition of the vacant land, there's a number of different loan programs that we can get into. And generally, when we are dealing with purchasing vacant land, going back to what we stated earlier, that vacant land loans are some of the least desirable loans from a lending standpoint. That very few lenders are even lending in that space. So for the majority of the lenders, and when I say the majority, I'm 98% of the lenders that are lending in that space do not want to lend or the money for very long. So what they will do is they will say, okay, great, we will give you this land loan and we will do it for 3 years or 5 years, maybe at the maximum. Okay, that's the traditional type of a land loan. And the reason for that is because the lender does not want to be invested or exposed on that particular type of investment for too long.
Mm-hmm.
When you are purchasing vacant land, they generally want you to discuss your exit strategy, which is, what are you going to use this land for, right? And obviously what they really want you to do is either pay it off in cash or build a home on it and replace that land loan with a construction loan. And then that way that land lender will be released of their investment on that particular land, because then it will be wrapped up into the construction loan.
Yeah.
So because of that,
Before you go on, we didn't really explain. So after the construction loan, for people that are listening and wondering like the process, when they do finish the home and everything's good to go and you have the house and you want to get rid of your construction loan, could you explain to them how the ending to that is?
So if we go back to that two-step, which is land acquisition and then construction loan, what's going to happen when you complete the construction, the home is fully built, is then we will refinance the whole shebang into what we call a permanent loan or traditional financing. So at that time, you could take on a traditional, conventional FHA or VA loan, even in that space. Any type of a residential mortgage would work in that space. Mm-hmm.
And that's the end goal for everybody. So you understand? Yeah.
Yeah.
And then you do your 30-year fixed, and then you're back at square one, like it's your own loan, that you have, that most people are used to when they buy their house. So there. Sorry, I just wanted to like tie that up before we like keep moving on. But back to the different types of loans that you have, I guess, before you get to the construction loan options?
So the land only loans, so yes, so when it comes to land only loans, the majority of them will be offered at a very um, small year lineage. So like we mentioned, 1, 3, or 5 year terms. Generally, the payments will be made principal and interest. And then that term will be reconciled through what we call a balloon. So that maybe the payback may be scheduled at principal and interest 30-year payback per se, but with a 12-month balloon. So what that means is after you make 12 months of payments, boom, you've got to come up with the residual of the monies that you owe in the form of a down payment. So in the example that we've been using, if you buy a piece of vacant land for $1 million, you put 400,000 in, that would mean that your balloon payment at the end of the 12 months would basically encompass that remaining 600,000 in loan amount. Same would go if it had a 3-year balloon after 36 payments, that the 600,000 or whatever's left over of that 600,000 would be due. And same thing for the 5-year. Most lenders will not write a land loan for longer than that 5 years.
Yeah. And then the other option, which definitely costs more, what are we talking about? Like, I guess for the interest rates today, I guess something similar to what that balloon payment loan would look like, and then maybe a different option that you have.
So, as you know, interest rates now are a little bit higher than they were than we had in COVID. The likelihood of us getting back to that 2.5%, 3%, 4% even is very, very, very slim. Our inflationary numbers, with the Treasury, the U.S. Department of Treasury, have gone so far in the other direction that the likelihood of us ever getting to those under 5 interest rates is very slim. But current interest rates right now are actually better in 2025 than they were in 2024. For residential interest rates, meaning a traditional home with a traditional transaction, you're still looking somewhere in the realm of about 6.5 to 7%. So if you're looking for a specialty land loan, you're going to be looking a little bit higher than that. So you're going to be in the 8 to 9% when you are dealing with a land loan with a balloon payment at the end. If we are looking for a longer term, and I think that you and I discussed this, Christina, that we do have a couple of programs that allow for a 20-year term, which gives you plenty of time to decide what you want to do with the property. You can even farm on it for a number of years before you decide to pursue that construction loan and save the monies for step 2, right? It's very rare that you've got a family that is able to come up with a down payment to acquire the land in step 1, and then they've got plenty of reserves and plenty of down payment, boom, ready to go into step 2 with a construction loan, possibly additional down payment, as well as all of the deposits that your contractor is going to require along the way. And where purchasing a standing home may mean that each inspection runs you $1,000 or $2,000, when you are dealing with a construction loan, every inspection, every deposit could run you upwards of $5,000 to $10,000. So your pockets really have to be deep in order to work in this particular space. But we do have a couple of lenders that will allow for a 20-year term. And for that, you do pay a premium. So interest rates could be upwards of 10%. But it gives you the flexibility to do what you want with that piece of property. And how you use it is 100% up to you. And because those 20-year loans are also fully amortized, meaning that as long as you make your principal and interest payment every single month in 20 years, that loan will be completely paid off because there is no balloon payment due or any of those other things.
Okay. So when would when would you say that spending 10% on a loan like that is going to make sense if it's like they are buying maybe perhaps a working farm that is generating more money than I guess the cost of that? I mean, otherwise it seems like if you are planning to build, it would make the most sense to do the balloon payment, option, 3 or whatever, and then move forward with the construction loan. Is that correct?
It could, there in this type of a space, Christina, there are so many variables that it's really hard to draw a definitive line as to which may fit which profile and which may not fit which profile because every family is going to be very different. What
Mhm.
I can say is this is readiness and preparedness would be number one. So if you are working with a family that, let's say in the example that we've been using, that they bought a piece of property for $1 million and they plan to build on it, which a construction loan, which could be upwards of another. Well, you tell me, what do you think is the price to build a custom home in the current market now in Hawaii, in Oahu?
It's it could even get up to like 300 per square. It's a lot. It starts adding up. Like we
Yes.
have a property right now, which is in Kalihi, and I think you're familiar with it. It's pretty much vacant land because there's a burnt house on it, and you literally have to demo it, take out everything because it's burnt, and you cannot salvage anything from that property. So you're going to level it out and you're going to do all that work up front, and then you're going to get your permits in the process, right? And then you're going to build the house. And it's an interesting one. I know our clients would like to see more out of it, but it's a rough market because people are literally like there's only so much cash they're willing to put down on one of these properties and buy it in cash. And that number is not matching what our clients are wanting for the property at this moment. So, um, you know, the other option is for these people because I for a lot of people that are in the investing side and they're doing this and they're flipping homes, they're only going to put a certain amount of cash into the property, right? They're not gonna just buy it outright if it's over a threshold of how much they're going to make from it. So that kind of leaves you in a bind. So I mean, they'll probably put 150, probably 200, at least 2 to 250 maybe into this house, just very basic house, and just to like flip it. But then if they do that and they're buying like top dollar for the land, like that's like they're not going to make anything, right? So it's kind of like one of those scenarios. But like even investors aren't really moving right now unless like the deal for the land's a good deal. So
100%. And just as you had mentioned, and that's talking about a parcel where it already had a structure on it. So a lot of the development costs have already, even though the home is burnt, for the most part.
yeah, like the
Um,
plumbing and electrical and all that's in place
yeah,
too, right?
yeah. So all that, what folks don't realize is sometimes that development cost can be upwards of 100,000 all by itself, and you didn't even get a house. All you got was some plumbing, and some electrical wires. And then to build, so let's say that that's 100,000, and then on top of that, now you've got to build a structure. Most brand new structures are going to run about 3 to 400,000. And that's also, like you mentioned, very, very, very basic. So if you are looking for a custom built with a lot of bells and whistles, we help families that build homes that are 8 to 900,000, and that's just the dwelling without the land. But most folks, if they are, and that also goes back to um, different types of buyers and different types of expectations. Some folks are wanting to acquire the land, put a very simple structure on it, and maybe do some farming, like you mentioned. And some families are this is their dream home, right? They bought the condo they didn't want. They bought the townhouse they didn't want. They bought the house in the subdivision they really didn't want. But the point is, they leveraged all of those assets to get to what their dream was, which is we want a home in a parcel somewhere that we cannot see our neighbors. And every single thing was custom built based on my wants, my wife's wants, my son's wants, my daughter's wants. You know, that swimming pool we dreamed of, that deck, that lanai with the ocean view that we dreamed of, or sunset view that we dreamed of. So once you get into that customized, really bells and whistles kind of a home, you can spend upwards of 800 to $1 million just
Yeah.
building that structure.
Yeah, my auntie back in 2008, 2009, I think, probably spent $5 million on her.
Yeah, yeah. Well,
Yeah.
and that $1 million home that I shared with you, I mean, it's in the middle of Salt Lake. It's really, it wasn't at the top of a hill, in a forest somewhere. It was just in a regular subdivision. So materials here are expensive. Labor here is expensive. Going through the trials, working with DPP, that's another thing when you're working with the Department of Building and Planning is folks think, well, if I just get my permit, if I just get my plans together and submit them and wait my 2 years, I'll get my permits. But that's not really the way that it works. As the department starts to review your plans, if there is something that they do not like, or the plans were drawn up in a fashion that they cannot approve, then they will kick them back for a revision, and then your contractor will have to resubmit. And when he resubmits, folks would think that they would kind of pick up where they left off, but that's not the case. You've got to start back in the front door, because if they found an issue with your septic per se, and they kicked it back for a revision because of the septic tank, they don't know what else in the plans that you may have changed. So that's why they're going to make you start in the very beginning again to make sure all of it is compliant to the rules and regulations and as set by City and County of Honolulu.
Yeah. So with that, I guess, are there some, I think there's a couple options that I think are worthy of sharing. I think one of them would be to focus on finding a lot that does have a structure on it, right? That does have something there, even if it is in not best condition. But the other option is, and I know a lot of people have been doing this as well, is that they're considering neighbor islands. And like the Big Island, for example, we actually have an agent on our team who works the Big Island. I mean, if you guys, anybody listening to this is curious on options on the Big Island, because the land there is much cheaper, and it's something that maybe you can acquire in cash, not having to worry so much. Then you could just do the other steps, right? After you figure out what it is you will do with the land. We can, talk about that as well at a future time, but it's something that you might consider, because you start running the numbers, and here on Oahu does not make sense. So, I mean, and I know you do deal with a lot on the Big Island, don't you?
Yes, we deal in all islands, and the Big Island is and the majority of the islands are extremely expensive, just like Oahu is. It's really only the Big Island, and then moreover the Hilo, Paoa kind of a side, not Kona, because Kona is also very expensive now too. But there is a lot of acreage that's available in that Hilo kind of a sector space. In fact, we just got an appraisal in today for one of our customers that we're working with, and I was taking a look at the comparables in the appraisal, and they're one of his neighbors. It was a very small house, 385 square feet, but it was already built, and it was on 3.4 acres in Pahoa, and it was sold for $235,000. And because the home has a structure on it, you can now get in with low down payment. Meaning, if you're going to move into the home, you can get in for as little as 5 or 10% down, depending upon exactly what's going on there. And then if you are an investor, you can get in with 20% down. And now you've got a structure that you can build on rather than building from the ground up. And what that's going to do is that's going to save those development costs that we talked about, right? So now you don't have to bring your own water and electricity. It's already there for you. And then on top of that, you can live in that tiny little structure and then apply for the permits to make it larger. But because you've already got a footprint there, it's much easier to get your permits than to get them when you're trying to build them from the ground up.
Yeah. So I think we covered a lot. I hope that this explains things a lot better for people who are just kind of touching the surface on this and was just curious about what would you do? How would this work? You know, what are the steps I need to take? What do I need to save up for? Is there anything that you would like to add to this before we jump off today?
I think the only thing that I may add is that one of the other benefits of having a parcel with a structure already on it is then instead of looking at construction loans and or being rather being limited to only construction loans and certain types of programs, you could take a look at, I mean, if the property is in relatively decent shape, you could take on a traditional transaction at that time and even come in with lower down payment, like 3 or 5% down, or even USDA financing, which allows for zero down in that space. And then when then as you apply for your permits, you can also take a look at a construction loan down the road if you don't already have the savings in order to rebuild. Another classification that's kind of a hybrid between construction loans and traditional loans is the renovation loan. And that is a very excellent space to lean into when you've already got a structure. And what that allows you to do is it takes into consideration what you want to build. And then from there, it looks at the differential and what you may need. So let's say that your home is appraising at 500,000 and you need another 300,000 in order to build. They will actually appraise that property based on what they call after completed value. And then you can borrow the remaining of that equity to help you build if you don't already have that cash. So having a structure on there really opens up your options in so many different arenas, including that renovation space as opposed to it just being a construction space.
So that renovation loan is an add-on after you already have the property.
Mm-hmm.
And so that's just it's not like a HELOC, but it works differently. But the concept where some people use a HELOC to like do some little renovations and stuff, it is a whole different program. I feel like you even have taught classes on it, right? Yeah. Okay.
Exactly.
But there's a lot more to it, is what I'm trying to say. It's not just like a HELOC. So for somebody that wants to learn a little bit more about that, you could definitely reach out to Judy. She can actually give you a more detailed snapshot of what that loan's like and how, like, if you already own a home and you want to renovate, or you own some land with like a house that needs some major work. These are kinds of things that, you can talk to her about, and she'll be able to, get you caught up and see if it's the right move for you guys. So without further ado, thank you so much for being here and spending this afternoon with me discussing these topics that I feel like a lot of people are inquiring about. They're trying to get and think outside of the box, especially with these the situation, the market that we're in, what everybody is going to do moving forward if they're retiring or their kids are getting older, and are they going to get to their dreams of what they really wanted being here in Hawaii. So there's a lot of those questions coming up, and I think this will help answer a lot of things for people today. So thank you so much, Judy. And I think that's all I have for you guys. Would you like to share with everybody how our listeners can reach you?
The best way is just to give me a call, 808-222-7903, and that is my cell phone. So a call or a text works great.
Awesome. And I think that's it. That's all I have. Please also check out our podcast. You can go to any podcast platform or you can go to our website, which is smartlivinghawaii.org. Also follow us on Instagram, smartlivinghawaii_org, or check us out on Facebook. So thank you guys so much. Till next time, live smart.